Trading in USA. The globalization challenge. The US role in shaping world trade and investment. As the United States enters the 21st century, it stands unchallenged as the world economic leader, a remarkable turnaround from the 1980s when many Americans had doubts about US competitiveness, productivity growth, the engine of improvement in average living standards. Trading in USA has rebounded from a 25-year slump of a little more than 1% a year to roughly 2.5% since 1995, a gain few had predicted. Trading in USA. Economic engagement with the rest of the world has played a key part in the US economic's revival. Our relatively open borders, which permit most foreign goods to come in with a zero or low tariff, have helped keep inflation in check. Trading in USA. Allowing the Federal Reserve to let the good times roll without hiking up interest rates as quickly as it might otherwise have done. Indeed, the influx of funds of abroad during the Asian financial crisis kept interest rates low and thereby encouraged a continued boom in investment and consumption. Trading in USA, which more than offset any decline in American export to Asia. Even so, during the 1990s, exports accounted for almost a quarter of growth of output, though just 12% of US gross domestic product at the end of the decade. Trading in USA. Yet, as the new century dawns, America's increasing economic independence with the rest of the world, known loosely as globalization, has come under attack. Much of the criticism is aimed at two international institutions that the United States helped create and lead. Trading in USA. The International Monetary Fund, launched after World War II to provide emergency loans to countries with temporary balance of payments problem, and the World Trade Organization, created in 1995 during the last round of world trade negotiations, primarily to help settle trade disputes among countries. Trading in USA. The attacks on both institutions are varied and often inconsistent, but they clearly have taken their toll. For all practical purposes, the IMF is not likely to have its resources augmented anytime soon by Congress. Trading in USA. Meanwhile, the failure of the WTO meetings in Seattle last December to pursue even a roadmap for future trade negotiations, coupled with the protests that soiled the proceeding, has thrown a wrench into plans to reduce remaining barriers to world trade and investments. Trading in USA. For better or worse, it is now up to the United States, as it has been since World War II, to help shape the future of both organizations and arguably the course of the global economy. A broad consensus appears to exist here and elsewhere that governments should strive to improve the stability of the world economy and to advance living standards. Trading in USA. But the consensus breaks down over how to do so as the United States prepares to pick a new president and a new Congress. Citizens and policymakers should be asking how best to promote stability and growth in the years ahead. Trading in USA. A variety of interests and prominent individuals, many of whom otherwise agree on little else, are pushing the United States to adopt a new economic unilateralism, one that, at its extremes, would abolish the IMF, the WTO, or both. Trading in USA. Some critics of the IMF, for example, argue that because the system of fixed changes rates that the fund was created primarily to support has collapsed, so should the fund. Indeed, some assert that the fund's role as emergency lenders to all countries has encouraged imprudent behavior by governments, borrowers, and lenders. Trading in USA. Abolishing the IMF, they argue, would make all parties behave more carefully with fewer financial crises as a result. In fact, the supposed safety net of IMF lending is far more porous than critics may acknowledge. IMF loans have not bailed out foreign holders of bonds or equities in emerging markets. Trading in USA. Furthermore, governments in those countries have had to submit to increasingly onerous conditions, themselves the targets of the other criticism, making it hard to argue that the fund's continued presence will encourage future recklessness. Trading in USA. The critics do have a point about one thing. IMF funds often find their way quite legitimately into troubled banks which use them to shelter large depositors from losses. But abolishing the fund to address this problem runs enormous risk. During the 1930s, the Federal Reserve effectively did not act as US lenders of last resort, allowing a recession to turn into a Great Depression. World leaders are right to avoid such a risk on global scale. Trading in USA.